Hey everyone, we'll do a raffle, and somebody could pick a ticker, and I'll do a DCF. You could also donate if you want to do a DCF. I guess the big thing is NVIDIA. It's so obvious, right? Why don't we just put our money into NVIDIA? After the fact, it seems so obvious. And we're all talking about shorting NVIDIA. We talked about shorting NVIDIA like a month ago or 2 months ago. And if NVIDIA crashes, we're going to be like, oh, why don't we short it? It was so obvious. But it could keep going up for another few months or few years. Like Tesla. Like, it was such an obvious short. But you might have been shorting it for like forever. I mean, it finally came down, but I mean, so it hit like $1 trillion market cap around, probably when it hit 400, because this is split adjusted. It was such an obvious short. It did come down, then it came back up, down, up, down, up. Now it's trading much lower. I sold that at NVIDIA 300. I know it's so hard to like. Sometimes you just sit in stocks for years and years and years, and then the stock like goes nowhere. And you're like, oh, I'm so stupid. Why did I hold that stock for so long? It's such a waste of money. So they had that huge run up. I mean, the stock really did nothing for like 15, 20 years. And then in like 2017, 2016 was when it started really going up. So you had, even if you got in at 2019, say, well, if you got in 2018, you would have been down like 30, 40% after a year. But then you would have to wait another year, and you still wouldn't be really up that much. And then it started blowing up. But once it was up here and it came down, people just thought it was going to just keep going down. It would never go back up. And now it's well past its all-time high. But it's got to come down. I mean, well, it doesn't have to come down. They're saying 11 billion of revenue. Like when they report 731 financials, which is their second quarter, which is second quarter 2024. But when they report the 731 financials, they project 11 billion of revenue, which is like much higher than they ever had. And that's why the stock shot up so much. If they do hit that 11 billion, it's going to keep going up. But if they fall short, then it's going to come down. The thing is, who knows if they're going to hit it or not? And then also, like, when do you short it? Like, it might. It's another 3 months till they release earnings, so it might keep going up for another 3 months. So how far out you gonna, do the short? Hey, what's up, Dawood? That's the hard part. Because when you buy puts or sell calls, there's that time factor, and it's just so expensive. The premium is so expensive, and I bet you the options, because everybody's thinking about this NVIDIA short. Everybody's talking about it, so you have to pay so much in premiums, it's almost not worth it to do options. If you want to sell the stock short, if you do want to short it, you probably want to sell the stock short, because with the options, even though like people like, unless if you bought options like, you know, a month ago, 2 months ago, if you longed it, if you bought call options, you could have done really well, because I don't think it was that popular. People thinking Nvidia was going to blow up, except, you know, the people who own Nvidia would thought that, of course, but so it's always priced in. You think AMD will hit all-time high soon? Yeah, I mean, it seems like it, right? I thought they were pretty close. I mean, I thought they were up a lot, like Nvidia. Marvell is doing really well. So yeah, so they're still below their kind of COVID rush high. Well, in 2000, sheesh. Well, I don't know if they'll get back to that. They would have to triple their market cap to get to 2000 levels. So they'd have to be 600 billion. Marvell was the big money maker. I think didn't they go up more than Nvidia? Because the market cap was a lot smaller. Okay. Well, they went up 32%. The same day, I think Nvidia went up 25%. But they're trading much lower than they were. That's such a small company relative to its. Nvidia is like 19 times the size. What are they? 920 billion? 960 billion. Sheesh, it's crazy. Well, I guess we'll do a raffle. If you want to donate, I could do a DCF, or if you want to do the raffle. Let me know you're here so I could put your name in the contest. See, I'm trying to make my videos longer. I don't know. I can't figure out this YouTube thing. I felt like I was spending a lot of time making like 15-minute videos, and they weren't even getting 1,000 views. I used to get 1,000 every video. Lately, now I'm getting like 500 a video. Like, I rarely break 1,000. So I've been making longer videos. I did a CVS video, 22 minutes. Today's video was 37 minutes, which is really long. So I hope that leads to something. I don't know. Let me know if you're here. I could put your name in a raffle. We should do a DCF on Nvidia. You're too busy? You don't have to watch my videos. Just turn it on and let it play. So don't worry about watching the videos. Just let it run in the background. And then once in a while, click in the video so YouTube knows you're there. Or leave a comment or something. If you want to help out, that is. If you don't care, then I guess forget about it. Well, this is getting more views than average. But I mean, it's terrible. Ever since I started doing videos again, 227 views after 2 hours is uploaded. I remember like a year and a half ago or 2 years ago, I was getting like 3,000-4,000 views a video. I think it's just the market. When there's a bull market, like the market's going up a lot, I get a lot more views. But when the market kind of is struggling, less people are kind of like watching finance stock market channels, which I get. I don't know, have you guys done fantasy football? When I'm doing really well in fantasy football league, like getting almost like around first place or in first place, I follow football so closely. Like I love it. I can't wait. But if I'm doing poorly in my fantasy football league, I don't even want to watch football. Like that shouldn't like affect if I want to watch football or not, but it does. Like I get so annoyed that my team isn't doing well. So I'm like just pissed off. I don't even want to care about watching it because I keep losing. I guess like the stock market, if it goes down, you're losing money. It's just like you don't even want to look at it. It frustrates you too much. It's like being like 100 pounds overweight. You don't want to know how much you weigh. You know you're overweight, even though you should be tracking it, because if you're 300 pounds, you want to know, are you down to like 298? Because that's a win. You're improving. But if you're up to like 305, that gives you information to like eat better. But you don't even want to look. You don't even want to know because you know it's going to be bad, whether it's 298 or 302. So you don't know, and that's how you end up becoming 400 pounds one day because you don't even want to look on the scale. How do you like my analogies? But I'm starting to get a little more because I wasn't even getting $10 a day in ad revenue. But lately, for the past 5 or 6 days, I've been over $10. So I'm like making like maybe $2 an hour. It's like slave labor. So I was 11, 10. I hit $18 yesterday, or 2 days ago. This is 1 day of ad revenue, $18. But somebody just joined my Patreon channel, so thank you for that. That really helps. If you want to be a member of the Patreon or on YouTube, you can be a member. But let me know if you're here because we can do a raffle. I only have 3 names. So just say something in the chat so I know you're here so I could put you in a raffle. But they did extend the debt ceiling. Not the debt ceiling. They extended the expiration date, I guess, on the debt. Hey, Joe. If people don't realize the U.S. could go bankrupt, like a state could go bankrupt, same thing as a person could go bankrupt or a company could go bankrupt. The way anybody goes bankrupt is they default on their debt. That's the definition of bankruptcy, pretty much. So if you don't want to ever go bankrupt, just don't take any debt. You won't go bankrupt. But if you can't pay the interest on your debt, you can't service your debt, then the entity that provided you that debt can take legal recourse and force you into bankruptcy. That's the thing about debt that's different than equity. When you have equity, there's no like legal recourse. Like if you buy stock in a company or you buy part of a small business, and that business starts to go under, they can't sue you for more money just because you own part of the company. You can't, the only thing you can lose when you invest in a company is your investment. You can't like be sued or lose any more money unless you put more money in. And or of course, if it's a small business and you want to put money in to help the business, that's up to you. But when you take on debt, you have to pay the principal and interest payments. There's a contract, there's a legal contract, and if you don't, your life could be screwed. Same thing with the government. They have more debt than anybody. And the U.S. government has gone defaulted, and it's not the end of the world. It's like a company filing Chapter 11. They just renegotiate their terms, and then they start over fresh. Something in the chat. PSP do. But yes. When the U.S. default. It does affect the rating because every country has a rating. We used to be AAA. I don't think we're AAA anymore. But if you're AAA rated, then you pay lower interest on your debt. But if you're like Venezuela and you're like probably single B rated, then you pay a really high interest on your debt. The U.S. defaulted on financial obligations once in 1979 due to a computer backlog, but the periodic crisis relating to the debt ceiling have led several rating agencies to United States federal credit ratings downgrade. So we did default once, but towns default all the time, like towns in the United States. And some towns are a vibrant town at one point, lots of businesses, lots of people. And then maybe a few decades later, the town is half empty because businesses leave, maybe for whatever reason, taxes are too high or the climate. The U.S. debt ceiling. But it could lead to a lot more inflation. Like if the U.S. defaults, or I don't think it won't, but I mean they may default, but I don't think nothing's like seriously going to happen like it is in Venezuela, like where money's worthless. It's too strong of economy. Okay. Okay, so I guess I'll do not much action today. Maybe it's Memorial Day weekend. Maybe that's why, I don't know. Okay, Gav, you have to get Ed. What's up, Ed? I'm doing this because of you. You asked for it. Usually I don't get many people that come to these things, so it gets a little boring. So, like some channels, they have like so many people. But Ed asked, so I mean, I figured I'll do it. I don't mind doing them, but it just doesn't seem like much going on. But okay, to Dawood, 3, Patrick, 6, Ed, 4. Wow, look at that! Everybody got 1. Imagine I hit 5. Okay, Ed. So Ed, you won. And let me know you're here. So the next raffle, Yeah, just pick a ticker, any ticker you want, and we'll do a quick DCF. Are you gonna pick NVIDIA? I assume. Where's everybody from? Are you all from the U.S.? I know there's a lot of people from Netherlands. Well, some from Netherlands. There's definitely people in Canada. I'm in the Bay Area too. I'm right by. I'm like San Francisco, pretty much. Ohio. Are you? You're probably South Bay. That's where most people live in the Bay Area. North Bay is much less populated. South Bay is more densely populated. Oh, you're in the Bay Area too. Brazil. Obrigado. Thank you for telling me that. Brazil. I went to Rio for a few days vacation. Oh, San Jose. It was really nice, Rio. The caipirinhas. After we came back from Rio, me and my wife made caipirinhas all the time. So good. North Jersey. Yeah, I'm from Staten Island, so San Jose. Okay, yeah. Most people live in South Bay. If you live in the Bay Area, Ed, pick a ticker. You won the raffle. Oh, that's down. Pick a ticker of a company. I can't really do a. Oh, Dow. Dow Chemical. I'm from RJ. Is that Rio? RJ means Rio. Is that Haywood? Oh, Haywood. Okay, that East Bay. That's a lot closer to me than San Jose. We should do a Bay Area meetup. We could do a live stream. We could all get together while I'm on a live stream. That'll be fun. Okay. I started the carnivore diet a week ago because I hear people talk about how better they feel, their mental clarity, their digestion. So I just wanted to try it. A lot of people do it to lose weight. I mean, I don't care about losing weight. I mean, if I lost 10 pounds, I'd be happy with that, but I don't really. It's more, I just want to like feel better. For 50, 51, 53. Oh, carnivore diet. So I eat a lot of beef, a lot of meat, steak, and eggs, and butter. But I sometimes eat turkey, chicken. If you get confused with the stock market, you feel like, oh, I don't really know what I'm doing. I feel like that every day. I'm like so convinced. Like 20 years ago, I'm so convinced. Okay, tech stocks. That's just the way to go. They make money. That's the future of technology. And then all these tech crashes, and then I'm like, bank stocks. That's where I should be putting my money. That's stable. The bank is kind of like So every time I think I know it, I realize, okay, I don't really know as much as I think. I think that now my new thing is, which I thought of before. I'm going to try to focus on stocks, companies. Don't think of them as stocks. Think of them as companies that make something of value, that create value. There's nothing wrong with investing in Bitcoin, but they don't really create anything that's helpful to anybody. People just buy it so they can sell it for a higher price. And that's any currency. You don't buy currency as an investment. Usually you buy currency as a hedging. You hedge currency. But crypto is kind of an investment. Okay. Yeah, closed-end funds. Well, I don't really invest in mutual funds. I have Dow at 77. Originally, it was 88, but I think I would use it in a conversion. But I would go with 77. 1 second. So when you say closed end, do you mean mutual funds? Is that what you mean, or you just? That's what usually most people mean when they say closed and open end. They're referring to mutual funds, but it's more of a generic term, closed end funds. But I don't really invest in mutual funds. Mostly ETFs. But it's really about what you're investing in, like what asset, what are you investing in? Right. Like I want to try to find things that create value, like Costco. I mean, Apple. They make these phones, which really people love, and they can't live without it. It's almost like an addiction. I mean, the most addictive thing to buy is companies are the cannabis, tobacco, and alcohol companies. They're selling something that people really, really need. Some people can't live without. But they generally don't trade as high as they should. But companies that create something of value, like but that's not implying like a company like Uber. They don't create a product that has value, but they have a service that's valuable to a lot of people that really helps people. So it doesn't have to be a product that creates value, something that improves people's lives. And just because you make something that improves people's lives doesn't mean you have a good business or you're good at running a business. You just might be terrible at running a business, or whoever runs the company. That's the hard part, is figuring that out. But it's really like you could find an amazing company like Apple, the biggest company in the world. You could lose a lot of money. mean, because the market's like a timing thing, like, and that's the problem. That's what most people, they time things really poorly, me included. Like I think I'm good at timing things, but I've made a lot of mistakes. Like, it's hard to lose money with Apple, but because they're a beast. But it's not, because if you bought, I mean, you could buy it. And there's not many dips, I guess, with Apple. Because I'm sure there's plenty of people who bought it at the very beginning of 2021 when it was at the peak. It's getting close to the peak too. Say for like 180 or 170. And then when it goes below 150, even below 140 or around 130, you're down like 30% and you have Apple. And it looks easy on a chart, but when you see it day by day and you're like, God, it's been 4 months. I thought this is supposed to be such an amazing company. I'm down 20% still, or 30%. I mean, if you would have waited a little longer, you could have got your money back. And I'm sure you'll make more money in the future, but it's just like, it's hard to sit there. So you just give up. A lot of people, like, when a market goes down or when a stock goes down, they just assume it's going to go down forever. And the same thing when the stock goes up, people think it's going to go up forever, so they keep buying it. So you really have to time things. So like the way I think about what? Oh, you didn't see it? 77. That's the model. That's what I think is appropriate. So I think like a stock as a open-end fund, because like a stock. No, sorry, wait. What am I saying? A stock is like a closed-end fund. It's confusing because when you hear closed, you think usually a stock, like the company can always issue new shares and buy back new shares, but at any given time you can't just buy more. You can't buy more shares, meaning you can't just buy a stock and the number of shares outstanding goes up. You're just buying from someone else. So the number of shares are locked until the company wants to change that. So it's really supply and demand is moving the stock price, supply and demand in the market. So you think of a stock as like a closed-end fund of sorts. And then on the opposite of that is open-end fund, where you could always buy, new shares and buybacks are always issued constantly as people put money into the fund or take money out of the fund. So it's always growing or getting smaller, the number of shares. Closed-end fund. So it's like if you bought if you bought like a apartment building with like 10 rooms and you needed investors because it was a couple $1 million to buy the building and you have to renovate, things like that. So it's kind of like a fund. You just have this one apartment building and then you have investors. Open a second building. You just have this one building, and if somebody wants to invest, they just have to buy from someone else. So it's kind of like supply and demand of I guess what people are willing to pay to invest in your apartment building. Maybe it's easy if I yeah, a 10-room apartment building. And why would someone, if it costs $2 million and you put $1 million and your friend put $1 million, you both own $1 million each, you own 50% of this closed-end fund, which is just a one building. Why would someone want to offer your friend, say you weren't willing to sell, but your friend might sell his half. Why would someone offer your friend more than $1 million? Well, maybe real estate prices are going up a lot, or you picked a really good area, or maybe you show a potential investor your portfolio, your tenants, and you show them how you have solid tenants, you do a good job at picking the right people, and you've been fixing up the each room. It's really nice, really upscale, and you're charging a lot more rent than you have each year. You're charging more and more money for rent. So maybe initially you calculated when you first bought the investment $100,000 of cash flows each year. Okay, cost, annual cash flows. You said to your friend, okay, just the way I calculate it, you show them all the numbers. You say, okay, we should be getting monthly rental income from all our tenants. And then we have to pay for maintenance, we have to pay electricity, we have to pay all these fees. And then we should have $100,000 of profit. We collect $180,000 each year from our tenants. $80,000 goes back to like maintaining the building, whatever. So $100,000 left over. That's what I estimate each year we should have. And you show your friend it's a 5% return. So it's a 5% return investment. And your friend says, okay, I think it's a good deal because if I own it for 20 years, the building may be worth $10 million. And then we could sell it for $10 million and I could make a ton of money. And at least I get my 5% guaranteed return. Ashley, what's up? You're doing a really good job at making the apartment look nice, making each room look nice, and also inflation and just things are getting more expensive and there's less places to rent in the area. So now you're profiting $300,000. Say after 5 years, now you're $300,000 of positive cash flow for the year because you're charging a lot more for the space and maybe you have other ways to make money from the building. So now it's an annual return of 15%. So you and your friend split the 300, but you still get a 15% because you each put $1 million in. So maybe your friend just wants to sell it. They need money for something. But So this is just a real simple example, but you might own a closed-end fund that owns 1,000 apartment buildings. So this is kind of like this kind of analysis you have to do on 1,000 times, which is kind of impossible because you don't have that much information. So the point is, if you invest in a closed-end fund, it does trade either premium discount to net asset value. So in this example, so net asset value is assets minus debt. So let's say in this example, our net asset value is $2 million because we don't have any debt. Me and my friend, we put $1 million each. We bought the apartment building. So that's the net asset value is $2 million. And obviously, this is not traded. This is not a liquid investment. It's not like it's a highly traded asset. My one building. But say it's $2 million and it's like in 2018 when we bought it. And now it's 2023. And now it's the current net asset value is $3 million. So it's trading. So that's kind of how you base it. It's getting a little too confusing. So depending on how much my friend is willing to sell his piece of the business for, if he's still willing to sell it for $2 million, even though it's worth $3 million, it's trading at a huge discount, a 50% discount to net asset value. My friend's still willing to sell it for the original $2 million, even though the asset is valued at $3 million. So it's a great deal in the market. My friend, he knows real estate prices are going up and he knows he get more. So he wants to sell for $4 million. But now it's trading at a premium to NAV because he wants more than it's worth. I think 33% premium. I don't know if anybody was following that. In my head, I follow it, but if I did a video, it would be clear because I would kind of put into a format and rehearse it, things like that. But that's like a closed-end fund. There's whatever assets are in the fund. And there's a fixed number of shares out there. And the value moves all the time based on supply and demand, like a stock, like any stock. But I don't know if there's any true benefit to closed end versus open end. It's not like it's really about what you're investing in. I don't fully understand closed ends, but they trade at large discounts to NAV. But so if you see a closed end fund trading at a huge discount, that doesn't mean it's a great investment. It might be a great investment, but what if you what if it was like in the year 2000 and the closed-end fund was trading at a massive discount, but it sold products, like it sold VCRs, like it invested in companies that sold VCRs. Well, the reason it's trading at a huge discount is because nobody wants to invest in a company that sells VCRs because it's an obsolete product. there's no future. It's like a stock that's extremely undervalued. There's a reason it's usually really undervalued. Same thing with a stock that's really overvalued, like NVIDIA. There's a reason, because people think the future is going to be amazing, and it might be. Okay, so I guess I'll sign off, because I still gotta finish editing the video. So thanks for joining. Try to watch the videos, even if you can't watch them. Just let them run in the background. Helps a lot. And talk to you later.